So he did it. He took that huge first step and opened a brokerage account. Seriously, congratulations. That's the launch pad. Now let's get you ready for your very first investing mission.
Right, so you've done the paperwork, you've put money in the account, and now you're just staring at this dashboard, right? It's full of possibilities, and maybe, just maybe, it feels a little overwhelming. Don't worry, we've got you. Think of this as your mission briefing. We're going to build a clear, simple plan to get you started on the right foot.
All right, let's dive right in. Every successful mission starts with a solid pre-flight checklist. This isn't about some, complex, boring theory. Nope. This is about a few super simple, absolutely crucial checks to make sure you're set up for success right from day one.
Okay, this right here, this is maybe the single most important idea you need to get straight from the get-go. When you buy a stock, you are not just buying some ticker symbol that blinks on a screen. You are becoming a part owner of a real, actual business, with buildings, employees, products, the whole shebang. Thinking like an owner, well, that changes everything.
And here it is. This is your 4-step checklist. Super simple. We're going to vet the business, get the calendar straight, focus on stability over some flashy promises, and then figure out how to build from there. Easy, right? Let's break them down, one by one.
So for step 1, just think about it like this. You're basically becoming a business partner. I mean, would you go into business with a company that's always in trouble or just seems flaky? No way, right? A long, consistent history of paying out dividends? That is a huge signal that a business is healthy, it's disciplined. A great little rule of thumb? Look for companies that have managed to increase their dividend for at least 10 years in a row. That shows real strength.
Okay, step 2. You got to know the calendar. There are 3 dates you'll hear about, but honestly, there's only one you really need to circle on your calendar in big red ink, and that's the ex-dividend date. To get that dividend payment, you have to own the stock before this date. It is the official cutoff. You miss it by a day, even an hour, and you have to wait for the next payout. So yeah, super important.
And that brings us right to step 3. Look, you're going to see some stocks out there that pay dividends every single month. And that can feel really tempting, right? Like this constant stream of cash. But listen, a reliable, boring quarterly dividend from a rock-solid company is 1,000 times better than some shaky monthly dividend from a company that might not even be around next year. Stability, my friend, is the name of the game. Okay, so you've got your checklist, you're feeling good, but now we need to talk about a really common trap that a lot of new investors fall right into. So think of this next part as a big, blinking warning sign on your mission map. All right, picture this. You're scrolling through stocks, and you see it, a dividend yield of 25%. Your brain immediately does the math, right? Whoa, if I put in $1,000, I get $250 back in a year? That sounds incredible. But hold on a sec. So what's the deal here? Is this a golden opportunity, the deal of a lifetime, or is this a massive bright red flag? This is one of those critical questions you have to learn to ask yourself, and the answer could literally save you a ton of money and heartache. So here's the secret. Dividend yield is just a simple math problem. It's the annual dividend divided by the stock's price. A healthy yield comes from a great company that's sharing its profits, but a dangerously high yield, that's usually not a generous company. It's a sign that the stock price has been crashing. As the price falls, that yield percentage gets artificially pumped up. It's a sign of a business in serious trouble, not a golden ticket.
Look, you've heard it a million times, and there's a reason for it. If it seems too good to be true, it probably is. In investing, that is your absolute best defense. Chasing those crazy high yields is one of the fastest ways to lose your money. Just steer clear. Don't fall for it.
All right, so you've done your homework, you've found a stable company, you've wisely avoided the high yield trap, and now the dividends are starting to roll in. Awesome. But we're not quite done. Now we got to talk about the part nobody loves, but everybody needs to understand, what you actually get to keep. This is the essential intel on your tax bill. And this is a really big one that trips people up. Even if you set your account to automatically reinvest those dividends, which by the way is a fantastic strategy, the IRS still sees that dividend as income you received in that year. So even though the cash never hit your bank account, you will get a tax form for it. It's so important to be prepared for that, so it's not a nasty surprise later.
Now, here's where it gets interesting. Not all dividends are created equal in the eyes of the taxman. So you have regular or ordinary dividends, and those are taxed at your standard income tax rate, just like your paycheck. But then you have qualified dividends, and these get special treatment. They're taxed at a much lower capital gains rate. We're talking maybe 15% instead of 24% or even higher. It's like getting a special tax discount,
almost like a reward for being a long-term owner in a solid US-based company. It's a huge, huge advantage.
Okay, we have run through the pre-flight checklist, we have pointed out the major hazards on the map, and we've covered the essential intel. Your briefing is complete. So, it's time to recap your mission objectives. Here it is, your final mission brief. Number 1, you are an owner, not a gambler. Say it with me. Number 2, focus on healthy, stable companies. 3, avoid that high-yield trap at all costs. And number 4, understand how your returns are taxed. That's it. That's your mission. You're ready.
See, with this framework, you're not just staring at a screen of random numbers anymore. You're actually ready to make a smart, informed first choice. So the only question left to ask is, what kind of business do you want to become a part owner of? Your mission begins now.